Imagine you invested $1,000 in silver at the beginning of 2025. You know how much you'd have today in December? Over $2,200. Silver has exploded by more than 120% this year, crushing all records and even leaving gold in its shadow. But here's what's even crazier. This is just the beginning. The world's largest financial institutions, investment funds, and even Russia are accumulating silver massively right now as we close out 2025. They know something most people still don't. Today, I'm going to reveal exactly why silver is about to shock the market in 2026 and how you too can profit from this historic opportunity before it's too late. Stay until the end because I'm going to give you concrete price predictions that will surprise you. Let's go. Listen carefully. We're in December 2025 and something absolutely extraordinary is happening in the silver market. The price of silver has climbed from under $29 per ounce in January to over $68 in December. That's a 120% increase, the strongest performance in 40 years. Silver has broken through all psychological ceilings, surpassed $30, exploded past $50, and reached historic highs above $68 per ounce. But this isn't just a passing speculative rally. There are massive structural, fundamental, and economic reasons behind this explosion. Global financial institutions aren't wrong. Silver ETFs have received over 130 million ounces of inflows this year, an 18% increase in total holdings. That's the equivalent of 4,000 tons of silver accumulated just in ETFs. Inventories in Shanghai have dropped to their lowest level in 10 years. Vaults in London are seeing record deliveries. Everyone is fighting to get physical silver. The second major reason is industrial demand that's literally exploding. Silver isn't just a monetary metal, it's also the most important industrial metal of our era. Industrial demand now represents nearly 60% of total silver consumption. Why? Because silver is irreplaceable in critical technologies. First massive application, photovoltaic solar panels. Every solar panel contains silver to conduct electricity. The global energy transition to renewables is exploding. Global solar installations continue to break records year after year, especially in China and Europe. By 2026, demand from the solar sector could exceed 230 million ounces alone. Second application, electric vehicles and automotive electrification. Modern cars use more and more silver in their circuits, sensors, and electronic systems. Silver is essential for motor electrification. Third explosive application, artificial intelligence and data centers. AI servers require high-performance connectors, and silver is the best electrical conductor that exists. With the explosion of AI, silver demand in this sector will skyrocket. Fourth application, consumer electronics, 5G, advanced semiconductors. Everything related to modern technology requires silver. And this demand is just beginning. The US government even classified silver as a critical strategic mineral in 2025, officially recognizing its importance for the economy and national security. Third crucial reason, major financial institutions are accumulating silver on a historic scale. Look at the concrete numbers. Silver ETFs received over 130 million ounces of inflows in 2025, bringing total holdings to approximately 844 million ounces, an 18% increase. To give you perspective, that's the equivalent of 4,000 tons of physical silver accumulated just this year. This type of large-scale accumulation typically reflects institutional allocation, not retail speculation. Hedge funds, pension funds, family offices, all investing in silver like never before. Why now? Because they see what we just discussed. The structural deficit, explosive industrial demand, and favorable macroeconomic fundamentals. Silver offers exposure to both a safe haven monetary asset and a critical industrial metal. It's a double opportunity. Moreover, the gold-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, currently sits around 79 to 1. While the 25-year historical average is 69 to 1. That means silver is undervalued relative to gold. Historically, when this ratio is high, silver tends to outperform gold in subsequent rallies. Institutions know this and are positioning their portfolios accordingly. There's even a historic event to note. Russia announced a multi-year plan to accumulate $535 million in silver in its national reserves. It's the first major central bank to officially add silver to its reserves in the modern era. That completely changes the game. Fourth major reason, favorable monetary policy and dollar weakness. The U.S. Federal Reserve began its interest rate cutting cycle in 2025, and markets anticipate 2 to 3 additional cuts in 2026. When interest rates fall, non-interest-bearing assets like silver and gold become more attractive. Why? Because the opportunity cost of holding silver decreases. If bonds pay almost nothing, you might as well hold silver that can appreciate. Moreover, real rates, meaning interest rates adjusted for inflation, remain low or negative. In a low real rate environment, silver shines. The US dollar dropped 9% in 2025, its worst annual performance in 8 years. A weak dollar makes silver cheaper for international buyers, which stimulates global demand. Precious metals are traditionally valued in dollars, so when the dollar falls, silver prices rise. There are also major political uncertainties around the Federal Reserve. The possibility that Jerome Powell could be replaced in May 2026 by someone more accommodative on rates creates speculation of even more dovish policies, which is very favorable for silver. Add to that concerns about exploding U.S. public debt, now exceeding $340 trillion globally. Investors are seeking refuges against monetary devaluation, and silver is exactly that, a real tangible asset that can't be printed by governments. Fifth explosive reason, we're witnessing a real silver squeeze. What's a squeeze? It's when there isn't enough physical silver available to satisfy demand, creating enormous pressure on prices. Freely tradable silver inventories have been massively reduced. In Shanghai, silver stocks have fallen to their lowest level in 10 years. In London, there have been record deliveries of tons of physical silver into vaults in October, signaling either hedging by industrial users or preparation for delivery demands from refiners and manufacturers. Metal exchanges around the world are struggling to keep their silver inventories filled. With less silver available for trading on the open market, investor positioning becomes a decisive force in price movements. Small increases in demand can now lead to disproportionately large price increases. That's the definition of a tight market ready to explode. There's also an important psychological aspect. Once silver surpasses certain psychological levels like $70 or $80, it can trigger additional buying frenzy from retail investors who don't want to miss the rally. We call it FOMO, the fear of missing out. Investors who missed the 120% rally in 2025 will want to enter in 2026, creating even more upward pressure. Sixth important reason, silver is regaining its status as a safe haven. Historically, silver has served as a store of value during times of crisis, just like gold, but with the advantage of being much more affordable and accessible for retail investors. In 2025, we've seen growing geopolitical tensions, economic uncertainties, stock markets at record levels with stretched valuations and concerns about financial system stability. In this context, investors are seeking to diversify their portfolios toward real assets. Silver offers this protection. Unlike fiat currencies that can be printed at will by central banks, silver is a finite asset that cannot be artificially created. It preserves its purchasing power over time. Demand in India, the world's largest silver importer, was at record levels in 2025. Indian investors bought record levels of physical silver and silver ETFs in the first half. Why? Because they see silver as protection against inflation and as a long-term investment. This trend is now spreading to Europe and North America. More and more people understand that holding physical assets like silver is a form of insurance against monetary system collapse. Now, let's talk about what really interests you. Price predictions for 2026. Where is silver going? According to several leading analysts and financial institutions, the forecasts are extraordinarily bullish. Citigroup predicts silver could reach $70 per ounce in 2026, based on solid industrial fundamentals and continued investment demand. Frank Holmes of U.S. Global Investors is even more optimistic. He sees silver reaching $100 per ounce in 2026, highlighting silver's transformation in renewable energy and retail demand, acting as a true juggernaut. Clem Chambers of a new FN shares this $100 vision, calling silver the fast horse of precious metals. Gold Silver and its analyst Alan Hibbard believe the market still has fully priced in the structural deficits and explosive industrial demand. He sees 2026 as a moment of long-term value recognition rather than a short-term trading target. CME futures contracts suggest around $60 to $65 for 2026, but these future forecasts are often conservative. Peter Krauth of Silver Stock Investor expects the market tightening to continue driving prices higher, with new cycle peaks exceeding 2024 highs. Some more aggressive analysts even see silver reaching $75 to $95 per ounce if current conditions persist. Why such predictions? Because the combination of structural deficits, growing industrial demand, institutional accumulation, and accommodative monetary policies creates a perfect storm. If even part of these factors materializes, silver has massive asymmetric upside potential. Now, let's be honest and realistic. There are also risks to consider. No investment is guaranteed. First risk, a sudden strong US dollar could slow silver's rise. If the Fed changes course and raises rates instead of lowering them, that could be negative. Second risk, a global economic recession affecting industrial demand. If economic growth slows sharply, especially in China, industrial silver demand could decrease. Third risk, massive profit-taking by investors who bought at low prices. If many people decide to sell to realize their gains, it can create temporary downward pressure. Fourth risk, a technological breakthrough that reduces the amount of silver needed in industrial applications. For example, if we find a way to manufacture solar panels with less silver, it would reduce demand. Fifth risk, volatility. Silver is historically much more volatile than gold. Its market is smaller, so price movements can be violent in both directions. You must be psychologically prepared for corrections, even in a bull market. Despite these risks, the fundamentals remain extremely solid, and the majority of experts are positive on silver for 2026. So, how can you invest in silver? There are several options, each with its advantages and disadvantages. Option number 1, physical silver. Buy silver coins like American Silver Eagles, Canadian Maple Leafs, or Austrian Philharmonics. You can also buy silver bars. The advantage is you actually own the metal, it's tangible, you control it. The disadvantage is secure storage and premiums above the spot price. Option number 2, silver ETFs. These are exchange-traded funds that track the price of silver. Examples include iShares Silver Trust or Sprott's PSLV. The advantage is liquidity and ease of buying and selling. The disadvantage is you don't directly own the physical metal. Option number 3, silver mining stocks. Invest in companies that mine silver. When the silver price rises, miners' profits explode even harder. That's what we call operational leverage. The disadvantage is additional risk related to company management and mining operations. Option number 4, silver futures contracts, but that's for experienced traders only. It's very risky and requires expertise. My personal advice, diversify your exposure. A mix of physical silver for security and ETFs or mining stocks for growth can be a good strategy. There you have it. You now know exactly why silver is about to shock the market in 2026. The structural deficits, explosive industrial demand, massive institutional accumulation, favorable monetary policies, market squeeze, and silver's return as a safe haven create a historic opportunity. The world's largest institutions are positioning their portfolios right now as 2025 comes to a close. The question isn't whether silver will rise, but by how much and how fast. Predictions range from $70 to $100 per ounce for 2026, with some analysts even more optimistic. If this video opened your eyes to this opportunity, leave a massive like, subscribe to the channel, and hit the bell to not miss any analysis. Share this video with your friends and family because this information can change their financial lives. Tell me in the comments if you're already investing in silver or if you plan to start now. See you in the next video to analyze other investment opportunities. Don't forget, invest intelligently, diversify, and never put in more than you can afford to lose. Stay smart, stay prepared, and see you very soon.